Imagine you're driving a supercar at a maximum speed and you don't intend to slow down. You're really enjoying the adrenaline rush. But what if your car doesn't have a cooling system? Your car's engine will undoubtedly be headed for disaster. In fact, everything works like that. What goes up must come down. The economic system is also quite similar, and the downturn is often called a recession. Just like the cooling system, a recession is required when our economy is heated up too much. But why is it so important? Hello everyone, welcome to Economy Experts. This is the one-stop destination to simplify your most complex queries about economics. Let's dive into today's video and see why we actually need a recession. A recession has no formal definition, although it's generally understood as a period of declining economic activity. Recessions do not include extremely brief periods of deterioration. The majority of analysts accept 2 consecutive quarters of declining real gross domestic product or GDP as a practical definition of a recession. Okay, if you're still struggling to understand it, just listen to what the 33rd US President Harry S. Truman has to say. According to him, it's a recession when your neighbor loses his job. It's a depression when you lose your own. It can't be more straightforward. However, recessions are quite scary. High unemployment, declining average earnings, greater inequality, and increased government borrowing are often characteristics of a recession. The duration and the magnitude of a production decline during a recession determine its effects. Those who lose their jobs or have their income drastically reduced are the most negatively impacted. Actually, it's based on the type of recession. The financial industry was damaged severely by the 2009 recession. Numerous highly compensated white-collar employees lost their jobs. Banks saw significant losses and declining profits. The housing market was severely impacted. Interestingly, certain recessions have a definite root cause. For instance, the 1973 oil crisis led to the beginning of the 1973 to 1975 recession. The majority of recessions, however, are brought on by a complicated triad of elements such as high interest rates, poor consumer confidence, and stagnant or declining real wages in the job market. Bank runs and asset bubbles are 2 other instances of recession causation. However, this time it's different. Experts believe that a major recession is on the way, and various reasons like inflation, COVID policies, and war are behind it. A peaceful solution is necessary to the terrible humanitarian disaster that the war in Ukraine has sparked. The conflict's economic costs will cause the world economy to expand significantly slower in 2022. Along with global spillovers through commodities markets, trade and financial channels, a catastrophic double-digit decline in GDP for Ukraine and a significant contraction in Russia are more than possible. And while the conflict slows growth, inflation will increase. Vulnerable people have been hit hardest by the sharp rise in fuel and food prices, especially in low-income nations. Increased inflation will make it more difficult for central banks to balance limiting price pressures with preserving growth. As central banks tighten policy, putting pressure on developing economies and emerging markets, interest rates are anticipated to climb. As investors were concerned that stricter monetary policy by inflation-fighting central banks may harm economic development, they faced their worst weekly decline since the global crisis of March 2020. Risk assets underperformed after a week of sharp movements across asset classes as leading central banks stepped up tighter policies to rein in runaway inflation, raising investor concerns about a global economic downturn. These market shifts highlight the dangers of a recession. You'll be shocked to know that the S&P 500 saw its largest weekly decline since the 3rd week of 2020, falling 5.8% for the week. In a letter to clients, Bank of America analysts stated, "Inflation, the war and lockdowns in China have derailed the global recovery. They think as long as the Fed keeps raising interest rates, there is a 40% probability that the United States will have a recession in the coming days." They stated, "We look for GDP growth to slow to almost zero, inflation to settle at around 3%, and the Fed to hike rates above 4%. Expectations over the degree to which major central banks will need to tighten monetary policy to combat out-of-control inflation have increased, causing investors' nerves to rattle." With that said, let's take to the lanes of history. The worldwide economic slump that occurred between 2007 and 2009 is known as the Great Recession, sometimes known as the financial crisis or the subprime mortgage crisis. In December 2007, the United States formally entered a recession, which lasted until June 2009. It was the longest downturn since the Great Depression, lasting around 18 months. The United States' GDP shrank by 4.3% during that time. After 2009, the effects of the Great Recession persisted. It took years for the US GDP, stock market, unemployment rate, and family income to return to pre-recession levels. The worldwide economy was significantly impacted by the Great Recession. 8.7 million jobs were lost by the American economy, and the unemployment rate doubled to 10%. Millions of people were unable to pay their mortgages as a result of job losses and a credit market that was becoming more restrictive and had higher interest rates. Between 2007 and 2010, 3.8 million homes were foreclosed upon. Due to the stock market meltdown, American families lost a staggering $19 trillion in net worth. But surprisingly, we noticed a silver lining after the dark period. Before the Great Recession, the majority of Americans were unaware of how much debt the nation owed, that an unaddressed bad loan may have on the economy as a whole. Also, the ratio of household debt to the gross domestic product was around 100%. You'll be surprised to know that household debt returned to about 80% after the recession. Even while they felt it was crucial to have a job to make a lot of money, high school students during the recession were less likely to place value on status markers like a brand new automobile or owning a vacation home. Aspiring inventors were motivated by the recession to pursue their inventions because they were jobless. Because there was less competition for talent and office space during an economic crisis, businesses were launched and succeeded. Let's go back further in time. The Federal Reserve raised interest rates in reaction to the rising inflation, which caused the recession of 1981 to 1982, which in turn helped to bring down inflation from 11% in June 1979 to 5% in October 1982. As a result, the US economy expanded over the following 8 years, and the glory never faded. The misallocation of investment capital, whether it was caused by a dot-com boom or housing bubble, can also come to an end during recession. Recessions can also offer chances for investors prepared to take the long view to earn significant returns by lowering asset values. Real financial savings on real estate may be available during a recession for both personal and professional gain. Since landlords are worried about a long slump and a rise in vacancies, businesses may discover that they may negotiate terms and conditions at this time. In these conversations, extending the lease's duration is frequently required and advantageous. So, you thought recessions are not that scary. Sometimes it is needed to fix the economy. Even the richest person in the world thinks so. Elon Musk, who earlier predicted a recession, now claims that it's actually a good thing, since it is a required rude awakening following a careless response to the COVID-19 outbreak. He also stated some bankruptcies need to happen. A Twitter user, Zach, asked Mr. Musk, "Do you think that we're approaching a recession?" In response, the SpaceX chief said, "Yes, but this is actually a good thing. It has been raining money on fools for too long. Some bankruptcies need to happen. Also, all the COVID stay-at-home stuff has tricked people into thinking that you don't actually need to work hard." Rude awakening inbound. Currently, the economy is expanding on a wider scale, but with ups and downs throughout time. The growth that is always trending upward and never slows down would result in greater salaries, which might raise inflation and raise the price for basic products. We all know that this is actually happening. Inflation is eating up the economy. A recession can bring prices down to a more tolerable level while also slowing the economy. The complexity of adjusting policy, though, raises the possibility that they may unintentionally start a recession. But an impactful recession will likely be necessary if rising inflation is more entrenched than we believe. Also, former US central bank policymaker Alan Blinder said, "The chairman of the Fed doesn't want to let the R word slip out of his mouth in a positive way, that we need a recession, but there are a lot of euphemisms that he'll use." But what do you think about it? Do you agree that a recession is needed in this chaotic economy? Don't forget to leave a comment about your opinion on this issue. And if you enjoyed watching the video, then please like, share and subscribe to our channel for more such exciting content.